It's time for our panel to preview MongoDB. The earnings are due out tomorrow, and we want to go over this a little more. George Seay, Executive Chairman, Annandale Capital, and Matt Tuttle, CEO, CIO of Tuttle Capital Management. Thank you both for being here. I'm sorry, it's after the bell today. Mr. Tuttle, tell us what you think here. What are you watching for?
So I'm excited about this one. I mean, I think the Mag 7 earnings, Facebook's deal with Meta told us it's safe to go back into AI infrastructure. These guys had awful earnings back, last quarter, gapped down big, gapped on Liberation Day, and really have not recovered. What we know about gap fills is eventually it's going to fill it back to the upside. So I want to hear kind of what it's saying about, so last quarter they talked about 2026 fiscal year is going to be a gap year when it comes to AI. I want to hear more about that. I think this is a show me quarter. And if the results are good, we could see this gap get filled to the upside.
All right, so you've got to be a believer in AI if you want to get in on this, says George Seay. But you're concerned about the valuation here, right?
Well, under any normal valuation metric, it doesn't make any sense, right? Unless it grows really, really fast. At 8 times sales and roughly 80 times earnings, it better grow really quick if it's going to grow into that. But the market likes the stock today. It's up quite a bit, Nicole, so it's doing quite well. So obviously somebody expects a beat and some good news. But unless you really love the AI sector, I don't really see a real reason to be super interested.
Like the software stocks, George, in general, or not necessarily?
Well, I'm kind of an old fuddy-duddy curmudgeon. I like the software stocks that are very well established, that traded anywhere from 15 to 25 times earnings. Or if you're going to own Microsoft, you pay 30 times earnings, 35 times earnings because you have to. But otherwise, I don't like to chase stocks that are really dependent on earnings growth that's so significant that it justifies a 50 PE or 100 PE or no PE because they don't have profitability yet. They've just got really high sales growth. So I do like software stocks, but I like the ones that have a lot less volatility.
And Matt, I mean, you've noted that we've heard from MongoDB, and they've been a little negative in the past. They gave us somewhat of a warning a few months ago. You said now it's really important for them to give us somewhat of a better outlook. I mean, what are you going to be combing through, when you're listening for this? Because you said I'm really going to be listening and looking for what they say today.
Yeah, I mean, it's really, for me, comes down to the outlook. Has anything changed since last quarter? I used to care about valuations. I don't think the market cares about that stuff anymore. And yeah, the retail guys, I monitor a bunch of discords. They're buying this one ahead of earnings. I don't buy stocks ahead of earnings. To me, that's gambling. But, if I hear anything decent about their outlook, then, this is something that we may look to buy tomorrow.
Yeah, look, there's plenty of people who buy ahead of earnings, but you're worried that there'll be a lot of volatility, I guess. When you think about the kinds of names in tech or software that you do like, Matt, what do you like?
So really, the thing I love about this one is it's one of the only ones that's not extended. I do like BWXT. It's a nuclear name. I like Vistra. I like a lot of the AI infrastructure. We went back into a lot of those after Mag 7 earnings, got out of them after that DeepSeek news, and we're getting back in there. Really not playing around in the Mag 7 right now. We rode that up off the Liberation Day lows and think there's better places to go. So it's really more of the infrastructure and looking at some of the energy stuff.
Are you worried, George, that markets can turn more negative? I mean, we've seen tech being the leading trade, helping us to get excited when we see NVIDIA at 100 and then 120 and then 140. People get excited for that. Tell me more.
Yeah, and back to my fuddy-duddy comment about how I'm kind of an old fossil at this point. When I think of Mongo, I think of the villain in Blazing Saddles. So that dates me as how far back I go. And as
I think of Flash Gordon, but
right, yeah, that's Ming the Merciless. Anyway, I am very concerned about the rise again of what I would call maybe not irrational exuberance, but the exuberance we're seeing in the market right now, because really nothing's changed since Liberation Day except Trump's pulled back on some of the excessive tariffs he announced way back when, but he's still very volatile on tariffs. He raised the tariff on steel from 25% to 50% on Friday. And there's just still a lot of uncertainty out there. Back to your prior guest's comment about the market really has a hard time pricing in uncertainty, but everybody's light and breezy and no concerns in the world at this point this week. After 2 months ago, we were collapsing. So
Okay.
I think the economy is going to slow down and we are at risk here. So I wouldn't be too aggressive right now if I were an investor.
All right, George Seay, Matt Tuttle, thank you both so very much. It's great to see you both. Really appreciate a good preview, too, of MongoDB, which is higher today, sitting at a level of 200 ahead of the earnings that are due out after the bell today.